We're in a transition market. Even though we have more inventory now compared to last year, the market has been seeing more competition between buyers. And what this is doing is increasing the average home price when we compare it to just 1 year ago. Right now, more buyers have already adjusted to the higher interest rate environment. And at the same time, homeowners with mortgages are hoping to see an improvement in market conditions as we continue into the spring market. And that explains why we're seeing more listings so far this year. But here's the thing, this isn't a typical spring market where we would normally see more sales transactions, more buyers, and average home prices rising. The market that we're in right now is barely fluctuating in terms of home prices and inventory. We eventually get this small glimmer of hope of more housing supply injected into the market for whatever reasons, but there still is never enough supply, which makes it a tight market, especially for buyers. So we have low supply with high demand. A lot of people are asking me lately what kind of market we're in. Is it a seller's market or is it a buyer's market? I've been mostly saying that it's a transition market where it's neither of the two. But looking further ahead, it will be transitioning into a seller's market. And what that means is higher home prices and more competition for buyers, especially as population growth increases. We all know that rates are going down this year. Even the Bank of Canada has acknowledged that it's happening in June or July this year. So with that kind of news, buyers are already resuming their home searches and getting back into the market even before changes happen to the interest rate. And gradually, prices will go back up over the next couple of years. I really can't see in any way how we could transition into a buyer's market. If anything, the pandemic in 2020 and the interest rate hikes throughout the last couple of years were the buyer's markets. Home prices came down during those years. Home prices are now trending up. The Toronto Real Estate Board is reporting a 1% increase in the average home price in the GTA. That's without any changes to the interest rate since July last year. And a lot of people are wondering how many interest rate cuts are coming this year. The CEO of CIBC, Victor Dodig, does not believe that the Bank of Canada will be making several changes to the key interest rate in 2024. Not to say that we won't see the rates drop, because they will. It's just a matter of when this year. There are still 5 opportunities this year for the central bank to lower the key interest rate. That's in June, July, September, October, and December. They just won't come down as quickly and as much that many homeowners and potential buyers are hoping for. I think that this year it's unlikely we'll see a drop of anything more than 50 to 75 basis points. And there's a reason why the central bank isn't in a rush to bring down the key interest rate just yet. There's still a concern with inflation. Mortgage interest costs have gone up so fast, with some people paying double of what their mortgage payment was just a couple of years ago. And rising interest rates is also one of the factors that has likely increased supply to the overall property market. The cost of ownership for existing homeowners, which include rising mortgage payments, increasing property taxes, and even condo maintenance fees that never go down, have all gotten too high. Eventually, the rates are going to come down, and it will happen this year. But no matter what the Bank of Canada does, the cost of housing will still keep going up because the amount of housing inventory available never seems to be enough. If they continue to hold the rate at 5%, which is what they've been doing since July last year, it's still a possibility that inflation could remain high based on how the Bank of Canada considers average home prices, rents, and mortgage interest payments in the calculation for inflation. But when they do cut the rate, which is speculated to happen in June or July this year, don't expect a big drop when the rate does come down. When the rate does come down this year, buyers will be ready to jump back into the market. And they've already started to do this because they're comfortable with the idea that high interest rates are actually just normal now. And this is also what's going to push home prices up. So no matter which way you look at it, whether the rates go down or if they stay the same, it's going to be a losing situation. In fact, if inflation comes down without the Bank of Canada having to bring down the key interest rate, you can probably expect the rate to stay at 5% for longer, because if inflation comes down while home prices remain relatively low compared to when they peaked in 2022, then the thought is that maybe there's no need to lower the rate, which is why buyers are re-entering the market, because high interest rates are just normal now. And it's a bit scary to say this so early in 2024, because if 5% is the new benchmark, then home prices could rise sooner than later. By the way, I'm Fred Tam. If you're new here, make sure to subscribe. I'm putting out new videos every single week to help you reach your real estate goals. Let's get back to it. The Bank of Canada also considers the unemployment rate, which went up to 6.1% from 5.8%. There was an increase of 60,000 people searching for employment. And despite this, the Bank of Canada is expected to remain patient with cutting the rate, because the last thing they want to see is a sudden surge in home prices that could wipe out all of the progress that they've made in the last few years. But like I said, holding it at 5% only delays the inevitable of rising home prices. Even the Canada Mortgage and Housing Corporation is forecasting home prices to reach similar peak levels that we saw in early 2022 by next year and reach new highs by 2026. There's no forecasting of declining home prices. The problems we're seeing today with affordability are still going to be around soon after mortgage rates go down, and especially when you factor in any forecasted population growth. It's likely that as population grows, first the rental market will see a spike in prices, with average rents going up, up. But eventually, many renters look to get out of the rental market. They'll start looking to buy their first home. And with the increased competition on top of existing buyers, this can only push home prices up. And yet, I don't see anything being done today to create an impact on housing supply to make housing affordable. Check out what the chief economist Bob Dugan from CMHC had to say about what they're forecasting for the Canadian housing market. We don't have enough supply of housing in Canada, so as interest rates begin to move down, the pent-up demand from potential buyers that did not buy in recent years because of high interest rates are going to be jumping back into the market. And when you consider the limited supply, the pent-up demand is going to put upward pressure on prices. He calls it the deterioration of affordability. And while demand for housing remains strong, we're going to see increases in the average home prices in Canada this year of about 5% is what they're forecasting. But by next year, they're also saying that the average home prices could go up closer to 9 or even 10%. So if 2025 is forecasted to see a 10% uptick in home prices in all of Canada, let's be honest, the GTA is probably on the higher end of that 10% and likely going to be higher. 2025 is just around the corner. We're already a third of the way through April. There's just 8 months left in the year. 5 more interest rate announcements are coming before the end of this year. And I think it's very possible we aren't going to see more than a drop of 0.75% in the key interest rate. I've worked with people recently who are getting approved for about 4.9% for a variable 3-year mortgage rate. That sounds pretty good and almost refreshing to hear that interest rates being offered to some borrowers are not in that 6 or 7% range anymore. And if the key interest rate slides down this year, even if it's a change of less than 1%, it's possible that we'll see variable mortgage rates back in the 3% range before the end of 2025. Subscribe to stay updated and I'll see you in the next video. Thanks for watching.